At the recent Nigeria Stock Exchange and London Stock Exchange dual listing conference in Lagos, panelists explored key issues around global appetite for emerging markets like Nigeria. There was an outlook for the global economy and market state at the moment.
Financial system is quite fragile right now globally. We see slowing growth in China, issues in Europe, and issues in the emerging markets. I wouldn't necessarily take it as a vote of tremendous confidence, but let's echo what Oscar said, which is we're all, I think, old enough. Most of us in this room are old enough. We've been through this before. I lived through the 2008 crisis here in Nigeria, 2001 crisis, 1987 crisis. I mean, it's inevitable in emerging markets. It's going to be a rocky road to development.
Why Nigeria remains an attractive market was raised in the discourse.
When you look at Nigeria, we have basically the fourth largest global population under 20. These people are growing up differently from some of us, and their norms of consumption are very different. So Nigeria, I think from a consumer perspective, huge opportunities. We've talked ad nauseum about our infrastructure deficit. That's also a huge opportunity. You just need a little bit more regulatory aspects to come to the fore. And when you look at our capital markets, the banking sector, etc., they're all, for me, I see positives. And these are all moving in the direction that says demand is there. People always say you cannot be in Africa and not be in Nigeria. I mean, that's the reality. If you want to be a Pan-African investor, you have to be in Nigeria. 65% of West African GDP is in Nigeria. So to me, Nigeria continues to have the fundamentals and the potential in the future. Perspectives of equity investors are different because they're much more opportunity seeking. On the debt side, you're looking at reducing risk. So they're very different. But if you're coming in as a long-term equity investor, you have to be in Nigeria.
Expectations from government on the forex management and concerns of foreign investors was also an issue tabled.
And so I think a big step forward would be a lot of clarification around the fact that the government has its dollars. It's imperfectly entitled to use its dollars for its own purposes. The private sector doesn't have a right to the government's dollars, so the private sector needs to tap its own dollars, and it could do so through the parallel market. But if there were some policy pronouncements and some policy changes that made it clear that was perfectly legitimate, because if you're a listed company in the New York Stock Exchange and you hear about a parallel market and a bogey and then a black market, you're not going to touch that. But at a certain level, I mean, I know medium-sized companies, quite large, they're much better off avoiding the whole CCI process. All they do is bring in their capital at today 320, and when they're ready to take it out, they'll take it out at the true private market exchange rate, and that's a much simpler process than trying to change it to 200 and pray that you can get it back at 200 in the future.
Also, the enormous opportunities and prospects in the Nigerian economy, despite all the issues raised, remains at the front burner.
What we're seeing is that companies who are looking to come in fresh, right, are basically doing their assessments of valuations at the parallel market rate. I mean, that's just common sense. The problem is for foreign companies who are already in Nigeria, who need to do expansions, are now worrying about anti-money laundering. If I bring in money at the parallel market, do I know where the naira is coming from? How do I eventually say I am very clear on the source of funds? That is one issue. And then also, how am I sure that there's enough regulation there to say I brought in foreign currency when I want to take it out? So that's a big concern for some companies looking to come in. So it's something that more clarity would help.
We're actually seeing now more investors, depending on their risk appetite, who are happy to bring in funds at whatever the street is and take their chances, whenever they want to exit. But it's important. We always, help them understand. One is obviously they can't get a CCI. And the parallel market is fantastic when you're bringing money in, but it's not that easy when you want to take money out. If you only have a few, tens of thousands of dollars, it's not a problem. But if you try to get $1 million, $5 million, $10 million from that market, you'll be surprised that there's no depth. But we find now that more clients are, depending on what the transaction is, are more receptive to considering that. And obviously, there are also a lot of offshore trades that are going on where the transactions are happening offshore, so they can settle the trade in FX without a domestic crossing.
You are still at an early part of that journey. It's absolutely possible to get there, also because of the size and the strength of the economy here, which will be one, at least either number one or number two pole on the continent. Looking at it purely from the base of the economy, it would be logical that this would be the capital market at some point in time in the future.
Despite the market volatility and economic uncertainty across the globe, the interesting fact remains that Nigeria is an attractive spot for investments.